Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is November 20th, 2023. This is the Forex Kickstart video where I take a look at the Euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. Kickstart your trading day. So let's get started. Looking at the daily chart of the Euro, focusing on that chart to start off with, which is unusual. But what we notice here is that the high price in trading here today moved right within this swing area here, where we had a number of different swing highs defining this range right here before the market moved to the downside. We return back to that area, and lo and behold, we do find some willing sellers against that level. Why? Because it's there, and the traders can define the risk and limit the risk against this highs right here. If the price stalls like it did here and here and here, again right here, we could see a rotation back down toward the 50% midpoint of the move down from the most recent high that happened in July to the low price that we saw in the month of October. And so that is the goal, is to risk a little to make more than a little on a corrected move to the downside. That's the hope. But if the price were to move back above this level, traders would also probably cover and look toward the 61.8% retracement as the next target to get to and through at 1.09594. And if they get above that level, it opens the door for further upside momentum. So this is a key area for both buyers and sellers, and indeed the sellers have leaned on the first attempt in trading here this week today. And let's take a look at the hourly chart. And what we see on the hourly chart is that the move away from the 50% midpoint level. That level comes in at 1.08613, and just above that level is the 100-hour moving average. The price last week based against that 100-hour moving average here and here and here and here, for that matter, and then moved to the upside. The CPI data on Tuesday helped that push to the upside. We had a lot of consolidation through the mid part of the week after the employment. We moved down on Friday, making a new corrective low, but that couldn't be sustained, and we started to see the price move and try to base against that 50% level right through here before moving to the upside and closing higher. So we moved away from that 50%. That gave the buyers the go-ahead to push higher, and indeed we are moving higher and trading here today. And we'll see if that swing area off of the daily chart can hold resistance. Again, it comes between 1.0925, 1.09438. Watch that area on the top side for bias clues for the euro versus US dollar going forward. Let's take a look at the dollar versus yen next, and let's focus on the daily chart. And what we see in the dollar versus yen is a move to a high price right here of 151.90. That was the highest level for the trading year. We had our low in January and have been trending to the upside. Now, what's importance of this level? Well, go back to this high right here. This is a 2022 high, going back to October of 2022, and that high price that we saw on Friday got within 3 pips of this high right here. And what was that high right here? What made that so important? Well, it was a 31-year high right there. So we had the chance to make a 32-year high in trading last week. Couldn't do that. The market started to rotate to the downside, and as you can see, we are increasing that momentum to the downside. Today, we did have a report on Bloomberg today that PIMCO is buying the yen in anticipation that the Bank of Japan will face pressure to tighten monetary policy due to rising inflation. That's at the time when the Federal Reserve is probably unchanged or thought to be unchanged and perhaps cutting rates next year. So what is that? That's bearish for the dollar versus yen. And we've only gone this far of what was this move to the upside. So there is room to roam if that fundamental story continues for this currency pair. So be aware, be prepared. But from a technical perspective, what I'll be watching in the short term is probably around this 146, 48, 80 or 70-ish type area, where we had a swing lower here, a swing lower here before moving to the upside. So a double bottom there before moving higher. We broke below that area around the 70 level, 68, 70 level. And we're currently trading around the 50 level for the dollar versus yen. So if the price can remain below that level, I think the bears remain more in control. Then we'll look toward this swing area down through here. Again, another double bottom there around the 147.26 level, and then toward the 100-day moving average that comes in at 146.52. We haven't been below the 100-day moving average. Tested there, and there since April of 2023, when the market traded above and below it and moved higher, and then tested it and moved higher here. So it's been a while since the 100-day moving average has been breached. Can we get down to that level? Sure. Keep that fundamental story in play. with the U.S. rates keep staying unchanged and Bank of Japan potentially moving rates higher to combat inflation, and that we should see the dollar yen move to the downside again. Technically, however, watch 146.70 as a level of resistance in trading here today in the short term to see if the bears can remain in control. Let's take a look at the sterling versus U.S. dollar. And on the daily chart, we will look at the, let's get over there. Come on. There we go. On the daily chart, we have the 100-day moving average coming in play at 125.056, and the high price in trading here today reached 1.2509, so just above that level, and could not sustain momentum above the 100-day moving average. We've since backed off the 124.70. So there is some sellers against the 100-day moving average. Last time the price was above the 100-day moving average, you have to go back to September 1 of 2023, as a matter of fact. So this is a significant failure to extend above the 100-day moving average, but we still all are above the 200-day moving average, which we traded above and below in trading last week. That comes in at 124.44. So on the down, battle is on between the two daily moving averages of 124.44 and 125.056. Let's take a look at the 4-hour chart, and you can see the battle going on against those moving averages. And there's also where the 200 bar moving average is a swing area down to 124.27. So we need to break below the 44 level, 200-day moving average, and the 27 level to increase the bearish bias here for the dollar, sterling versus U.S. dollar. On the top side, if we do move higher, we're going to be watching the 125.24 to 47 level. Get above that level and look toward the 50% midpoint of the same move down from the July high to the low price that we saw in October. That's this high right here to this low right here. 50% retracement comes in at 125.88. So watching 100-day moving average, watching the swing area, watching 50% retracement on the top side, on the downside, watching the 200-day moving average. So there you have it. Kickstart to your trading day today. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.